right, it's 2:00. We know your time is valuable, so welcome to those of you who are logged on. And want to welcome you to this webinar today. This is Tom Randall from Goldencare. I'm joined today with my partner in crime, Dennis Reiner from Goldencare as well. And Dennis and I have been in this industry a long time. I'm in my 27th year at Goldencare, and we have had the honor and privilege, more mine than his probably, of working together for pretty much all of those years. And we're really having a fun time with this Integrity Short-Term Care Initiative. We've given about 30 live webinars. I think we're on number 27 or 28, Dennis, over these last 25 days and 25 business days, I should say. And it's been a pleasure to really go out and try to help some of our integrity partners and their downline agents learn about the importance of extended care. So, Dennis, I want to do a sound check here, and you can say a quick hello if you like, and we'll get rolling.
Yeah, hello everyone. Thanks for joining us this afternoon.
You bet. You bet. And Dennis is going to jump in, and like I said, he's you're in good hands. One thing about Dennis is he's really a master of this market. He's done tons of training. We've trained, between the two of us, thousands and thousands and thousands of agents. And Dennis has trained even more than I have over the years. He's been a traveling maniac through all these years when we were in long-term care. And he and I were part of writing over $1 billion worth of long-term care over the years. So we've been deep into the trenches of this extended care market for many, many years. And for the last many of them, we've really started moving into the short-term care and home care markets as well. And that's what most of our emphasis is on for this Integrity Short-Term Care Initiative, as you know. And I always give Dennis a hard time, but he knows how important these stats are as well. You know, stats are funny. You don't use them a lot in some of the consumer side of it because, you know, that gets a little boring for people just talking about stats. So we talk a lot about how to go out and start the conversation and how to do a good job of selling and developing the need, if you will, by telling stories and mainly by listening when we get into the sales side of these webinars. But one of the things that I'm passionate and Dennis is passionate about, because we've been in this for so long, we've seen firsthand how important these products are and how important the need is. Because no matter what happens, if you look around in America, there's a lot of gray hair. We've got baby boomers turning age 65 faster than you can imagine, just about. And 70% of folks, once they hit age 65, are going to need some form of extended care. And, you know, it comes in lots of different shapes and sizes, but especially with these short-term care plans that we're talking about today, most people will be able to use these policies because the claim triggers are relatively light compared to long-term care. So when you look at stats, like 90% of married couples will have at least one of them needing care. Remember, those are sometimes things as small as saying a hospital recovery or a knee replacement, hip replacement, or a fall that you have a fracture, that once you get older, you're going to need help with activities of daily living, et cetera. So you're going to see these policies get used, and they can be lifesavers, because 3 out of 5 individual bankruptcies in America are caused by medical expenses like this, and a lot of time custodial expenses. So we know it's important, and unfortunately 90% of Americans have never had a discussion about it. So at the end of the day, we know COVID has kind of scared people about facilities. It's an important part of our protection, but people buy these policies to stay at home. And when we get into the sales side of it, we talk a lot about how you want to go out and really stress the home care side of it and talk about extended care instead of short-term care and all those different things that we might touch on briefly today as we go through this product training on OmniFlex. But Dennis, you know, I'll turn it around. Dennis and I have done a ton of these together, so it's something that we bounce back and forth when we're speaking about it. And Dennis, if you want to talk about one of the biggest abilities of these plans, a lot of times availability, and I'll let Dennis take this slide, and then we'll go from there.
Yeah, Tom, you know, you're absolutely correct. It's, you know, I say to agents all the time, you can design, you know, the perfect plan, and the perfect plan you are ready to present, and it carries with it, you know, probably a perfect premium. And you may think you have the perfect prospect, but if you're not in that perfect state where it's available, then it's all for naught. So here we have with GTL Recover Cash on availability, been around the longest of the 3 integrity proprietary products. So in about 37 states approximately. OmniFlex just added, Indiana, I think it's actually coming on this weekend. Isn't that correct, Tom? Or is it actually up and running now?
I think it's up and running now. Yep, we're
Okay.
in. So we
Yeah.
got her
So
colored there.
yeah, and hats off to Tom. Tom's been working with the Manhattan team to go after some of those problematic states. We're refiling in Pennsylvania. We're going back after Virginia. We're going to try to get, at least to the same level of what GTL has. Wallaby, the latest, the latest entry came in really just the tail end of August. They have their approach is that they have 10 states initially out of the gates, and then they'll be in 2024, they'll be adding more states, and they usually do it in 5-state increments, but they'll be coming in 2024. We don't have an exact time frame on that, but you can see the color-coded key there that shows you whether it's just GTL by itself, the lighter blues, the OmniFlex, or the Wallaby. By the way, that's Tom, you must have I don't know if that was Lynn or you that actually gave the Wallaby colors, because that's actually their color. And then the GTL and OmniFlex, where they're available in all 3 products there. So we hope to have more coverage, and you can see the gray states, and with the gray states, we want to make sure that as part of our perfect portfolio, and today we're talking about OmniFlex, but we want to make sure you've got coverage. And so we have a product, a non-insurance product, and Tom, you may want to say a word about that.
You bet.
And then we'll just go on to the next.
You bet. Yeah, thanks, Dennis. And what he's talking about in these gray states, I'm living right in the middle of one here in Minnesota, and it's a pain in my rear, as you can imagine, because Minnesota and California and New York and Florida and Washington and several of these northeastern states over here, they want to protect their consumers, so they always figure, well, we're not going to approve short-term care plans because agents might misrepresent them or whatever the case may be. So that's really unfortunate. It's one of those things. We actually have lobbyists out in a couple of those states, at least, trying our hardest to tell them that you're really kind of hurting your seniors, because these products are so strong, and you're going to see today, you can build them to be very robust plans. So what we want to do is make sure that we try to get it available in as many states as possible. But what Dennis was alluding to is we also, in our short-term care initiative, if you're not already familiar, when we take you out to the site at the end of this webinar today, we'll show you that we have home health care plans available that aren't comprehensive like these plans, but they don't offer facility, but they're very good, solid home care policies. And we even have a non-insurance product that's available, and it covers all the gaps, all 50 states. So no matter who you're talking to, no matter where your clients are, whether you're selling Medicare, life insurance, whatever the case may be, remember, we have a solution for them in this Integrity portfolio to go out and offer some great protection for themselves and their families. So they're going to thank you for it later on, for sure. So today we're going to talk about the Manhattan Life product. We're using the actual deck that Manhattan used by and large for the most part. But again, as a carrier, Manhattan's been a great partner with Integrity for a long time, do a lot of their med sups, and now with the short term, and we have a home care plan as well. So Manhattan's a strong company. Not going to spend a lot of time on that, but we will tell you that we're real proud to be one of the designing companies with this. We really worked hard to design OmniFlex. It was literally three years in the making, because this plan is certainly not vanilla. It's a little bit different than the other policies out there. And hopefully you'll see that today in this webinar, but you can see, and you probably can't read these anyway, but agents across the country have really embraced this. We had what's called a soft launch before we went out nationwide, and this product's already breaking records in sales, and agents are really turning to it for the states where it's available, because it is a strong product that does a lot of stuff that looks a lot like long-term care. So it's very, very strong in that respect. And not to toot our own horn, but I tell you what, we helped design that Mutual of Omaha long-term care plan. And I don't know if Dennis was going to say this in the next couple slides as part of his introduction too, but we've written a lot of that. It went from number 10 in the industry to number 1 in the individual market. And it's a strong product in long-term care. And it's because we had cash in there and certain things that really made it a strong standout. And we've done the same thing here with OmniFlex. So we're hoping this is going to catch on like that mutual plan did as well. So Dennis, do you want to talk a little bit? When we get into sales, we talk a lot about the fact that we don't have to design a Rolls-Royce plan. And we talk a lot about short-term care when we're talking to consumers on our sales side. We say use extended care or some other verbiage that you like to use, because short-term care, for a lot of Americans, they think, oh, was that a little plan that pays 30 days coming out of a hospital stay? Well, Dennis, if you want to cover a little bit on the cost real briefly, just kind of talk about how we don't have to cover everything, but some of these plans have the potential, as you'll see today, to really be robust plans or flexible enough to be smaller plans. Go ahead, Dave.
Sure. Back to my comment about designing the perfect plan, because that perfect plan, you might think, has to cover 100% of the cost, and that's that perfect premium we talked about. But the reality is, in most cases, people are going to co-insure this risk, and so you want to give people the amount of coverage that fits into their budget. But it's important that you don't, back to the statistics that Tom talked about, that we don't emphasize this. No one likes to be scared into the idea of numbers being thrown at them. They're pretty much aware today, unless you're living under a rock and haven't had either an experience or don't follow what's gone on, especially as a result of COVID. These semi-private rooms today, look at that, it's approaching $100,000. And, Tom mentioned about our early days in long-term care. I can remember when it was a big deal when we said, oh, this is going to cost you about $36,000 a year. And we can see now where private rooms are already, surpassing that six-figure. And where is it going to be? And when we think about these timelines, 2030, oh, that's like forever away. Really, that's 7 years. And so keep in mind, again, that it's important that you understand, so that the client understands that care is not going to go down in the future. It's only going to go up. And most of those costs that you're seeing are not necessarily brick and mortar costs. It's the labor cost, and the caregiver shortage today is very apparent with all the top home care agencies and even the top facilities. It's hard to keep good people. It's not, sometimes those individuals, hats off to them, because they have a lot of compassion and everything else that goes with fulfilling those roles of helping individuals in their time of need. But it can be a challenging profession. So labor costs are definitely going up to find the right people who are willing to do it. You bet.
You bet. Thanks, Dennis. And when we look at these basic plan features today, you're going to see, again, a bird's eye view. The first thing that pops out at you, especially if you're used to being in the long-term care market, which most of you on this call maybe weren't, but one of the nice things about these short-term care plans, and this is certainly a great example with this plan that we're talking about today, the OmniFlex plan, the issue ages go all the way down to 45, but more importantly, they go all the way up to 89. And you're going to hear a lot about, when I talk about that little cliche of, one of the best abilities of these plans, their availability. It's not just state availability. One of the things you're going to see with OmniFlex, and one of the reasons we really worked hard and it took a long time to develop this policy, is that we have the underwriting net thrown pretty wide. It's one of those plans that really stands out from the competition, actually. For a comprehensive short-term care plan, we can cover a lot of people who wouldn't be covered by some of the other plans in the industry. So we're proud of that fact, and we think that's an important part of this, is we want to make sure you don't have to go through the 25 pages of underwriting, it seems like, with long-term care. But even in short-term care, we really simplified it down. And I'll show you an example of that on the app as we go through, so you can see just how easy it is to get this policy for a lot of the folks you're going to be sitting in front of. And when we get into sales again, we teach you all that area of how to develop that need. So simplified issue, that's what we mean by that. It's very broad on the underwriting. These policies, of course, have a 30-day free look, so you can get that urgency in there to get the policy in place and start the coverage. And one of the cool things with this is our prescription drug benefit, that first day after it's effective, you can go out there and get $300 per day prescription drug reimbursement. And it's not even a reimbursement, it's more of a rebate. So the average 65-year-old people in your wheelhouse, or you're working with day in and day out, these policies will pay for all those prescription drugs and refills, $10 for the generics and $25 for brand names. And I'll tell you what, the average 65-year-old has about 27.3 prescriptions and refills a year. So people are going to get basically a net premium reduction right out of the gates of probably almost that full $300, if not that full $300. So it's a really nice way to keep these net premiums low with this plan when you take that into account. And of course, all these policies are guaranteed renewable, meaning that as long as you pay your premiums, they can't change it because of your health if it gets worse in the future. Okay. application fee, jump in whenever you want, Dennis, you know how we work, but there is a one-time application fee for each applicant. So if it's mom and dad, there is a one-time $25. We try to get around that, but that's one of the things on this plan, but it's not like some of the policies that have ongoing 25 every year, or it's just one time. And that is commissionable, by the way. And rates, the rates are varying. We got some good rate tools to show you, and their rate tool at the Manhattan site is very strong. One of the things we liked about this plan is the spousal discount. They have a 10% spousal discount if they're married and they both have a policy. So it's a nice opportunity to have that extra savings as well. Dennis, do you have anything you want to add on that, or?
Yeah, I mean, unisex rates, as we talked about, and Tom, you talked about some of the differences between long-term care. We're really going back to the future here by selling that upper age market. For those in the Medicare space where your client may have been priced out of or underwritten out of it, you'll be happy to know that that we're selling a lot of folks in their 60s and 70s, and they're getting coverage. We're placing about 90% of the business. So this is, you know, all this is just kind of the rules of the road that we're trying to establish. And so, Tom, as we go on, I know we're going to get in a little bit more of the features, and I can take a little bit of this and then maybe flip it back over to you here in just a moment. But
Sure.
This is a foundation. The base plan is on the facility side. Some of you who were on our Wellbe training the other day learned that Wellbe was the only short-term care product that actually has a base of the home care where facility is a rider. But 50 to 400, elimination periods 0, 20, 60, 90. I think that probably, I don't want to put an actual statistic percentage on this, but I would say the vast majority of our sales are 0 or 20. In the long-term care space, there is most sales there are 90 days. So, and again, the benefit periods all the way out to 1 year. Tom's going to talk about how we can stretch that, but all the way down to 90. You're thinking, why would someone want a 90? Because as Tom said, you know, some people have a misconception about short-term care, thinking they only are 90-day plans. But there are some sales strategies where you need sometimes a shorter benefit period, and you can save premium by having that. And as Tom indicated earlier, people will claim on these plans a lot more readily than they would with long-term care. And the bed reservation is included, 10 days, lifetime maximum of 20 days. Tom talked about that prescription drug. It's the only short-term care product in the industry today, currently. I use the word currently because all these carriers are competitive. They all see what others are doing. And so we never know when there's going to be a change. But it's the only, the OmniFlex is the only plan today that has that prescription drug benefit. And as Tom said, that great premium reduction, I call it the premium justifier. And Tom, I know an area near and dear to our heart is this Fast 50, and we can talk a little bit about the example of what we did with Mutual, but I'm going to let you, because I know that you, this is one of the benefits that Tom was very passionate about, in making sure that we could put into the plan. As you know, as he said, 3 years in the making, and we won't give you the whole laundry list of all that we went through over those 3 years. But that's this built-in Fast 50 is really important, as is restoration. And so, Tom, share with the group a little bit about why those are such strong built-in benefits.
You bet. Yeah, that's one of the things that you guys will see is that when we say it took 3 years, it's not because we're slow at what we do. It's we had a couple things that we were really stressing pretty hardcore with the carriers, and we're so glad. It was great working with the Manhattan Life team, because they really understood the method behind our madness. And I'll tell you what, that Fast 50 benefit, if you guys have been in sales at all in the senior market for extended care, one of the biggest objections you hit out there where people say, you know what, my family is going to take care of me. And we know there's some downfalls to that, but the beauty of it is it's true. This in our long-term care market, what we had is 70% of our claims started out with people saying, I'm going to take that discounted or that lower cash benefit. And that was 50% for a while, and then 40%, and now it's 25% on the long-term care. So it's varied over time, but originally when it was at 40% even, people were jumping on that. 70% of the people were starting out on that cash benefit, and 70% of those folks stayed with it. So with OmniFlex, we're expecting, I don't know if it'll be quite that high of number, but I tell you what, it's really strong to be able to see there. You can see that it says waives the elimination period. That's not as big a deal because, like Dennis said, most of the time on our facility and our home care, we sell 20 days max, maybe 0 days most of the time. So it's a little bit rare we have bigger elimination periods. But the key with this is the perfect for family and friends and spouses. We have a lot of married couples we're talking to, and they're saying, well, I'm going to have my wife take care of me or my husband. And that's a huge peace of mind for people at the time of sale, because this literally puts to bed that big objection, and it gives them the opportunity to say, hey, at any given time, if you hit the claim triggers, you can look at this plan and you can say, if you're willing to take 50% of whatever benefit you have available at that point in time. This is on the facility-based plan, but it's also on the home care side, and that's where most people use it, obviously. And the home care side of it says whatever your benefit is at that point, you can get 50% of that, and you can have your Fast 50 benefit. And I'll tell you what, that's just a benefit paid in cash. You can use it for anything you want. And it's available, again, for family members, friends, spouses, church groups, whatever the case may be. So we're excited about the fact that we think people will utilize it. As a matter of fact, we had our very first claim for Manhattan Life, and they opted for the Fast 50. So we're seeing that that's going to be a nice option for people, and especially at the point when you're developing the need and finding solutions, make sure you remember to bring up that part of this policy, because it is a really nice peace of mind for people. And whether they use it or not, that's great. It's the peace of mind of knowing it's there, and the flexibility of knowing they don't have to choose it forever. They can start out with the Fast 50 or vice versa, and they can switch back over to the full indemnity benefit at any time they choose. So very flexible, switching back and forth. So it's a best case scenario for the clients. Okay. Jump in if I missed anything there, Dennis. Restoration of benefits, if you're in long-term care and you're in that field right now, take your hat off or tilt it to the side, whatever the case is, because this isn't long-term care. This is short-term care. And I'll tell you what, restoration of benefits was oftentimes a benefit or a rider for long-term care plans, but it wasn't utilized that often because of the fact that you needed to have tougher claim triggers to use those benefits in those plans. With short-term care, remember, the triggers of these policies are much easier, where you don't have to have a doctor say you're going to need help for 90 days minimum like you do with long-term care. With these, it says you either have a cognitive impairment or a functional impairment, and the functional impairment means you need help with 2 of 6 activities of daily living, like dressing. Bathing is usually the first to go. Bathing, dressing, eating, etc. So those are the things that you have to look at. So think about a senior population. All of a sudden you have a hip replacement, knee replacement, fall down on your walker and have a fracture. Some of those things that with long-term care, they say, nah, you're probably going to be really in the hurt bag for 30 days, but you're not going to hit 90. So these are the policies that can step in. Short-term care can step into those situations. So we're going to see restoration used a lot more often. And all restoration says is, if you use some of your benefits in your plan, and then you get better, which is very common again with these plans, then after 180 days where you wouldn't have needed any care and you're feeling better, the computer will automatically restore your benefits. And it will restore it multiple times on both facility and home care. So this plan is stronger than the other ones, and a lot of the other ones in the industry, because of the fact that it does restore multiple times, and it does restore both the facility and the home care if it comes up. So you can go all the way up until 2 times the benefit period that you sold the people. So I have a whole separate Fast Fact webinar that I'll show you, give you access to, that shows a little detailed example of how restoration works as well. So Dennis, anything else you need to add on there?
No, perfect. No, I think as we move along and talk a little bit about, again, remember, these policies have really less moving parts than what we see in the long-term care space. So we're talking about just home health care being a rider. We'll talk about a couple other riders here in just a moment. But remember, home care is intermittent. People don't get care every day. So you can choose from $50 a day up to $300, same elimination periods that you saw on the facility side, same benefit periods. Again, the lifetime maximum of 2 times as far as the benefit period that Tom talked about just a moment ago with restoration. and so keep in mind that home care is, in a survey recently by AARP, 86% of people said that they want to remain at home. Now, we know that what Tom just covered with the facility is important because there is a progression of care. And when care progresses to a level where they can't stay home, then they have to go to the facility. But look at how strong this is. And Tom, there's some great advantages, whether it's medical home care or just custodial home care services. And it's kind of back to that labor cost of what we talked about earlier, and about how those costs continue to go up. And remember, this is indemnity based, full indemnity. So you may want to illustrate just why that's so important, Tom, when someone starts using some of these services, whether it's a home health aide or physical therapy, just what that means.
You bet. That's one of the things that you have to remember with indemnity is once they hit the claim triggers, any day they actually have care come in, that'll pay whatever your daily benefit is if you're on the indemnity side of it, right? So that's a pretty nice thing because we sell a lot of pretty robust plans, and we can go show you the power of these plans. You can design up to $1 million policy with OmniFlex, so you can design some very robust plans over time. And I'll tell you what, with this one, you can see the home health aid there, $169 a day. That's probably an average of 3 hours a day. But if you had a home health aid come in just for 2 hours, you or the whole $169, for example, if you had a $300 a day benefit at that period in time or more with our inflation, I'll tell you about, remember the power of indemnity. It pays the full indemnity amount regardless of how much the actual care costs that day. So you can end up having some extra money to bank on the side. And the other point I want to bring up on this slide is that we're using the deck that Manhattan uses. And I never like when they list out all these things, nursing care, therapy, et cetera, because I want to make sure you realize that if you read it close, it does say non-medical homemaker services too. So this is not an exhaustive list. This is just an example of the different things. Basically, these policies are super wide. We fine-lined the language for Manhattan to make sure it covered everything that you could possibly really imagine that's a legitimate type of care. So even things like visiting angels, some of you know about, and those unique types of caregiving organizations, they can come in and do that companion type service, et cetera. So there's some really nice abilities with these plans to do some great things at the home level. And again, you can come out ahead. And with the Fast 50, you can obviously have family members as well. So it's about as strong as you can get when you get to home care, I think. Simple inflation, I'll cover this one, Dennis, if you want. One of the nice things we like about this plan too is we know these are long-tailed products. Sometimes you're selling it to not just the older people because we have nice lenient underwriting to cover a lot of people, but also we're going to see this with the younger folks. When you get a 50-year-old, et cetera, or a 55, 60-year-old even, they might say, boy, I really believe in this type of coverage and I want to have some extra bang for my buck. So one of the things you're going to see is this is basically in every illustration, and it's in the brochure, and it shows you how an OmniFlex plan works with or without inflation, okay? So this example here shows a $200 a day base benefit, and this is one of those things we tell agents, this isn't a secret, this is our secret sauce, because this policy, we try to tell people we want to avoid adverse selection. We want agents to go out and talk to people and say, let's get this policy in place as soon as we talk to them because it is so powerful at claim time. And one of the ways we do that is by the unique design. If I offered somebody or sold somebody a $200 a day benefit, in this example, it uses $200 a day. And the way it works then on day one, once it's effective, it starts at 50% of whatever benefit I sold. This is the same for facility and it's the same for the home care, okay? So if I sold $200, the first day after the policy's there, you have coverage and it's strong, but it's at 50% of whatever you initially sold them, okay? 50%, 60, 70, 80 until the fifth policy anniversary when it goes up to 100%. It goes up in equal increments, okay? Don't forget, this is not a negative. We tell people, show your client that. Don't let them be surprised. Make sure you show it to them and say, the reason I'm doing this is because you know what? I can tell by talking to you, there's a very good chance you're not going to need this policy for several years down the line. Just like when we sell homeowners and auto, we hope you don't use the claims right away, right? If you do use it, you have some strong coverage. But what we're banking on is the fact This policy, after 3 years or so, we have a tool that we can do examples against anything else in the industry. It competes very, very well and performs super well at claim time. Whether it's even 3 years down the line before it's fully matured, usually dollar for dollar, this is a super well leveraged plan. Okay, so that's the first thing I want you as agents to understand. 50% to start, up to 100% the 5th anniversary. Then if I don't buy inflation, it levels off. Okay, and it stays the same. So in this case, it'd be $200. A lot of people buy inflation with these policies because it's very inexpensive comparably to what you might be used to with long-term care. And it's very powerful for the fact that once it matures, then in the 6th anniversary, you see it grew. So it's starting the 5th anniversary, it starts growing, and it grows for 20 years because it's simple inflation from the 6th policy anniversary up till the 25th. Then it levels off. Okay, we did the leveling off again to protect our carrier partner, Manhattan Life. And we know these policies are going to do a great job at claim time because there won't be runaway inflation or anything like that as well. Dennis, need to add anything there? Or we think we got that covered?
Yeah, I think you're okay there, Tom. I mean, it really is advantages. It avoids the adverse selection, as you indicated, and very rarely do we have claims that are going to be in those early buy today and go on claim tomorrow. And the other reality is these products, the carrier knows what their risk is, and so with the ability to have inflation double once, it's not the runaway inflation that has caused the concern about rate increases in the long-term care space. I think you're going to see a lot of stability here with these short-term care products.
You bet. We might have time today to jump over and show you an example of OmniFlex, because the power with this plan, believe me, we designed it because we needed it to be viable at claim time. So it's really well leveraged at claim time. And we have an actual little chart we designed that was simple to do with our in-house tool for any example, but it gives you just a side-by-side with it against one of the big players in the industry and shows you how it outperforms. Maybe not the first year. That's when we say, if you're going to go on claim next year, maybe some other policy might be a better choice. But most of the time, you're talking to people who don't plan on going on claim until 3, 4, 5, 10 years down the line, right? Anytime after about 3 years, you'll see that the OmniFlex plan really performs well. So no worries there. I don't want you to ever feel nervous about selling it because of that. And that's why we say, don't keep it a secret. Explain to your clients real briefly, not as detailed as I obviously went with you, but just tell them this is why this policy is so strong and why it offers cash and can do things that nobody else out there can do. Okay. Also on this plan, not part of the base or as the, but like the home care, it's a rider, so you don't have to choose it. But a lot of MA plans out there, a lot of Medicare Advantage plans out there, this is a nice little rider built right into the plan as a rider that you have $50 to $300 per day for 3, 6, or 20 days. And with a lifetime maximum benefit period of 180 days. So this, again, you in the Medicare field probably understand what we're talking about. MA plans are great. They're low cost or no cost, but they do have some out of pocket. This is a way to cover those. And it's a nice way to do it right at the time of sale to give them some extra protection. So our MA folks love this. Some of the people sell it, some don't. It's totally up to you. It's very affordable. Dennis,
hey Tom, just another word on that. It might be that when you're meeting with your client in the Medicare arena, and you are they're asking about filling those gaps. It might be that you're leading with hospital indemnity. Now, there's certainly some great standalone products out there. We've got some great ones that we work with. But here's the other aspect. You might be backing in where you're satisfying their question about hospital indemnity. And you can go and talk about it from the rider standpoint, and then back into the rest of the extended care conversation with the facility and the home care. So, it doesn't always have to be that you're having the extended care conversation and then adding the hospital indemnity rider. You could go the other way.
Absolutely. Yep, absolutely. So we already talked. I just jumped over that, and I'm going to go show the actual application here, I think. The actual application, this is just to show you how simple this plan is, and whether you're in this market or not, this should make sense to you because you're going to see some pretty broad health conditions. We're proud of the fact this plan, I think, does a pretty good job of going through and getting people appointed or getting people insured pretty easily through the underwriting side of it. So when you do, most of you won't use a paper app. We do have fillable apps available for every state, but if you wanted to use a paper app, and it's easier to quickly show you, I think my example, the part 1 questions here on the health, if you can read them well on your screen, I hope so. And I'm not going to read all of it to you, so don't panic about that. But if you answer questions yes to any of these top 5 up here, then you're going to see that we can offer coverage, okay? And basically, these are super broad. This is why I brought you here. First one is, do you have AIDS or HIV? Second one is, are you on Medicaid already or Medicare due to a disability prior to age 65 or disabled? Pretty broad. Here's the activities of daily living we're talking about. Are you already having help with activities of daily living? Obviously, they can't insure you then. Are you already receiving home care? Are you in a facility? Are you being treated for, I'm really proud of the fact that we have Parkinson's in stage 4 or 5. So we had somebody qualify for a coverage who had early stages of Parkinson's. We're really proud of that because most of the carriers out there won't take Parkinson's at all. Then you can see cognitive impairment in here as well. Then it talks about diabetes with complications, not just diabetes, with complications. So we have some strong things here, but these are pretty broad, right? In the last 12 months, are you waiting for surgery or something? And in the last 24 months, there is cancer breakdowns besides skin cancer. So besides those really broad areas, we have the ability to offer coverage with this plan. And one of the things you'll see is we have a limited plan or a full comprehensive plan. And that's one of the ways we can throw the net so wide with this policy, okay? So those top ones I just showed you were knockouts, but when you go to the e-app, you would see the first thing they ask you is how broad of coverage can we get you? Remember, we just showed you $400 per day facility, up to $300 per day for home care. If you answer yes to some of these other broad conditions down here, we don't have to walk away. Like most carriers will say we have to walk away, but Wellbe and OmniFlex do a nice thing where they have a 2-tiered underwriting system. And what we did here, it says in the last 24 months, it'll ask you these questions. And if you answer yes, we can offer you a policy still, but we limit it to $100 per day for the facility, the home care, and the hospital indemnity, okay? So still, again, don't kid yourself, $3,000 a month can keep somebody out of a nursing home for a while with home care like that. So it's still a nice policy to offer people. But the nice part is, look at these questions. In the last 2 years, have you had a stroke or TIA? Again, a lot of people won't have that. Diabetics with 50 units, lupus, MS, ALS, all these conditions that a lot of carriers run for the hills, these we can still offer some coverage. Okay, so you can see COPD down here, et cetera. So we have some nice extra things on here with the ability to offer coverage. And when we do that, we can go out and throw the net much wider. We have lots of different things we can talk about that, but I don't think we have to. But our medication list, tell you what, very broad, very easy to read. If you wanted to get involved in the medication list, you can. We have all these tools available right on our site. Including on our site, we have the InstaPivot tool. And we won't get into this today, but we have training on this available. And you're going to see here, if you want to get a little bit more involved and go in and use our InstaPivot tool, it's a very strong tool. And Dennis, I got to take a drink, so I'll turn that over to you for a real brief introduction if you'd like on that.
Yeah, this tool was actually Tom early on had this lined out on an Excel spreadsheet, because in our efforts to put together these plans with the various integrity initiatives that we've just talked about, he was researching and making sure that he understood all the underwriting conditions and on every single application. And so then it turned into, from an Excel spreadsheet, to our IT department getting involved and making this a very robust. And really, if you were not part of the marketers that brought you onto this webinar, and this was on the open market, it would be a subscription service that people would pay upwards of $60, $70 a month to have access to, that you get access to this for free. So the power of it is lying in being able to get smarter on underwriting by being able to put in the conditions and being able to also look at the medications. And when Tom was talking previously about that med list, to tell you the power of OmniFlex, and again, Aetna's a great company, and we certainly have done our training on the Wallaby and on the GTL. But of the 172 medications on that list, Aetna would have declined 148, and Aetna and OmniFlex would have only declined 54. So the net is wider on an underwriting because of that ramp up that we talked about earlier. So Tom, back to you to maybe spend a few more minutes, and I know we're getting closer to the end here.
Yeah, sorry. Yep, sorry. I meant to, Mike, I meant to send you a message. I'm on a webinar right now. I'll call you back, okay? Sorry about that. Thanks. Sorry, y'all got to hear that. We can maybe edit that out. I was trying to do that message thing and I accidentally answered the phone. Anyway, sorry about that, everybody. But one of the things you'll notice on this, and boy, I think Corey's on the line. Corey, way to go. We have our web designer on the line. Today is the day we introduced Indiana. Literally yesterday, we found out it was officially ready to go. And one of the things you'll like if you use this tool, and you don't have to use it, we show you that that's not necessary for you to use it, but if you really want to have a cool tool that'll show you what's available in any given state, I clicked in Indiana here and it immediately showed you True Freedom. Remember, that's available in all 50 states. GTL's Home Care is available and Manhattan Life's available. So it'll turn green for all the states that are available. And Corey, if you're listening, great job. Way to jump on that and have Indiana light up already today. So this is a living, breathing tool that as any changes go on in the industry, this site will automatically update for it. So you don't have to worry about missing anything there. Real quick, before we let you go, I do want to show you that we're not going to throw you out of the plane and hope that your parachute opens. We want this to be a complete effort on our part. Dennis and I are proud and privileged to have the opportunity to help our integrity partners. And part of that is right here. Integrity short-term care. It's integritystc.com. And hopefully the marketer sent you here has told you about this site, because this site has pretty much everything you need to be very successful in this realm of what we're doing. Okay, I'll come back to the sales. Here's that InstaPivot tool you can click and you can get access to that. Here's the comprehensive short-term care plans we talked about, the OmniFlex today, and then we have Recover Cash and Wallaby. And then down here is our home health care only plans in our Integrity short-term care initiative. And that is the GTL home care, the Manhattan home care, and the True Freedom plan. That's a prepaid home care plan. It's not even an insurance product, but a great tool to help your clients. So if you were to go into the OmniFlex, just because we were there today, I'll go to OmniFlex. And real quickly, just to give you a bird's eye view, real quick state availability, there's Indiana filled in. My team did their job well. Again, they got this updated right away. There's a quick little fast facts video library here that you can go to, and you can see all the different things. If I click on that, you can go right over. This is kind of relatively new and we love it. There's our Wells Fargo building that Integrity is in Texas. And it shows that, and then it goes down and shows you fast fact videos. And we have a bunch of these we're developing as we go. So you're going to be able to go in here and learn about the cash benefit in a real brief online recording, two-tiered underwriting, an explanation of that if you need some help on how to explain that, restoration of benefits, the power of that. And then there's going to be a bunch of other fast facts as we put them in here. Again, living, breathing site. We just are initiating this now. So this is one of those nice things that we know are going to be there for the future. Okay. And when you go down here, you're going to see product highlights, a bird's eye view of the product, presentations and brochures. All these different things that you're going to love to have access to are right here in this area. The Fast Facts video is going to be a link there and show you links right to all these different Fast Facts. Quoting, you're going to have the ability to go on here and get right to the Manhattan site, which we won't have time today, but we do have a webinar on how to do the enrollment and the e-app. So lots of different things here. I'm not even going to go through and touch them all, but tell you what, this site is here, and every one of these policy sites that we have, they all do this same thing where they go and give a lot of information from the carrier and from our team here at Goldencare to try to help you as much as we can with that product line. Okay, so I hope you'll be pleasantly surprised. If you click on sales and marketing, since we still have a minute left, I'm just going to show you real quickly in here some stats about extended care so you know why you're doing it. Then if you go down to this product sales and marketing, I'll tell you, this is a really nice site as well that you can go in here, and all the webinars that we've done, you can go in here. If you missed any of these up till now, you're going to see here's all these different things. It's going to be loading now because we're on a webinar and I'm using a lot of bandwidth. All the different things from product trainings into how to go out and start the conversation, overcome objections, etc. So everything you can need to be successful is right here at your fingertips inside this site, including agents, marketing assets to get agents, and we have a full pack of info pack for consumer advertising as well. And down below, Dennis Reiner himself, who's on this line, I can talk about. Dennis has trained literally thousands and thousands of agents and has trained or educated thousands of consumers as well on extended care. So you're going to see some of these fireside chats and sales tips from Dennis as well. So everything you pretty much need is going to be on this site and is already on this site for you to be successful. So that being said, Dennis, I'll turn it over to you and we'll close out since we yapped at him for our full 45 minutes already.
Yeah. We always, before these webinars, we always say, well, this one will probably be a little bit shorter, but we always seem to go the full length. I just want to say that, this is a one-stop shop for you to have everything under one roof with that site. And, no more do you have to worry about, where did I put that OmniFlex brochure? Or how about, referring back to that infographic or the med list? It's all there. And do take the opportunity to register. We do track who is signing up for the InstaPivot only because we have to know that it's not, we don't want necessarily people who shouldn't be using that tool to have that tool, but it is free and it's available to everyone who is who's contracted. In doing business with one of our partners. So reach out, as Tom likes to say. The next step is up to you. Contact your marketer that invited you onto this, and we hope that tomorrow is our last webinar, Tom. Hard to believe, and it's more going to be a session where those that want to be a part of it will get a chance to ask questions, and it'll be more of a open dialogue, if you will, and we'll also be sharing some insights on that particular theme as well.
You bet. You bet. And again, we both want to thank you for your valuable time today. And remember, when Dennis says it's our last webinar, that site's still going to be updated and it's going to be constantly there with all the recordings that you can listen to if you want to go out and help your clients. And we're having a new set of webinars at the end of this month, starting October 30th, that we're going to be working with some of our partners who maybe sell more life products, but a lot of the training is really on the same points. So we're going to have the partners who are already working with you have the ability to reach out to you and get you on those webinars as well. So we'd love to have you come back and join that. Remember, the key is this: you're helping people, just like Zig Ziglar always says, the more people you help, the better success you'll have. But at the same token, remember, it's good for you as well, because when you're helping those folks out there, you're establishing yourself as a trusted advocate who's going to help in more than just the Medicare or life market or whatever you're working with. And more importantly, you're going to keep that ability to keep that persistency with that business you're putting in place. So next year, when people are starting to knock on doors and scratch on windows to come in and replace your MedSup, your MA, or your other plan, whatever you're using, you're going to have the ability to say, hey, I've got multi-lines of products with this client. They know that I'm their person, so they're going to reach out and have that closer relationship with you. So plus, we know this isn't a hobby. If you sell these products, very, very generous commissions. So you're going to end up with some nice commissions with tails on them as well. So lots of good reasons to get involved. We appreciate you jumping on. And again, I won't extend this anymore and take more of your time, but from Dennis and myself, again, sincere thank you for jumping on. Hope to see you on future webinars, and good luck. If you need any help, reach out to that marketer, and we're here to help them in the back office as well. Thanks, everybody. Have a great day.
The next step is yours. Contact your marketer for more information and to start offering short-term care solutions to your clients. And be sure to sign up for our other short-term care hot topic webinars.